days this month, the juice is focusing on ETF investing. We'll go from the basics to deep in the weeds. For example, today we'll start with a primer on investing in indexes via ETFs. Because it was a rough year for the market, we focus on 2022 performance to illustrate the distinctions. First up, we have the actual index. Now, don't confuse an index ETF with the actual index. To color this disclaimer, we use the NASDAQ. There's the NASDAQ Composite Index, which tracks the performance of almost all NASDAQ stocks. And then there's the NASDAQ 100 Index, which tracks the performance of the 100 largest non-financial companies from the NASDAQ Composite. Then there's the ETF product you've probably heard of, the Invesco QQQ Trust Series 1, which tracks the performance of the NASDAQ 100. Day in and day out, it ranks among the most searched ETFs in Trackstar, our proprietary sentiment indicator. This look at 2022 year-to-date performance of all three tickers shows virtually identical and ugly returns. While it makes sense that the QQQ ETF and the NASDAQ 100 mirror one another, you might wonder why the larger NASDAQ Composite, which contains more than 3,000 stocks, delivered basically the same performance last year. It's because the top 100 non-financial NASDAQ stocks account for roughly 90% of the movement in the broad NASDAQ Composite. This is due to the size of these 100 largely tech companies. There's also an ETF that aims to mirror the NASDAQ Composite's performance, the Fidelity NASDAQ Composite Index ETF. Unsurprisingly, it posted a negative return of around 33% in 2022. Of course, the NASDAQ 100 and the QQQ are tech-heavy. But this is where things get interesting. In yesterday's juice, we dug deeper into the composition of tech-focused ETFs for one way to construct a well-rounded tech stock portfolio. And later this month, we'll look at constructing portfolios from other sectors as well as the broad stock market. So if that sounds like the sort of research you want hitting your inbox on a daily basis, sign up for the Juice newsletter immediately.